Michelle Caruso-Cabrera is CEO of MCC Global Enterprises. Chris Grisanti, Chief Market Strategist at MAI Capital Management. And Dewardric McNeal is Senior Policy Analyst at Longview Global. Michelle, I'll just start with your kind of general takeaways in terms of it's an interesting setup in general where you have a temporary government employee given an hour to have a send-off.
Well, with all the focus from the bond market about the levels of government spending, I thought it was interesting that Elon put on a very good face about cutting $1 trillion worth of spending, which is substantial, but was not his original goal.
Yeah, and that would be over 10 years if it happened.
Right. His original goal was $6 trillion. Remember, he's very close to the president of Argentina, who cut the budget 30% in 1 month. And if you were to cut 30% of the U.S. budget, that's what you would get, the $6 trillion. But he ran into a lack of presidential power, right? He ran into Congress. He ran into all of these headwinds. So he didn't get as much as he wanted there. But put on a good face, and it was a good effort. And he says it's going to add up over time. Yeah,
I mean, there's just not that much discretionary spending as a percentage of the mix you can even work with there. Dewardric, maybe we could just talk about this China piece and whether, you know, what we've heard today on both sides, this idea that maybe there's been a little bit of additional friction, not as much contact, maybe mutual accusations of either side not living up to their deal.
Yeah, well, I think certainly stalled talks is important for us to kind of disaggregate. The low-hanging fruit here was lowering the tariffs. The other stuff was always going to be complicated, and it's important that we baseline to get a deal for the first trade war. It took almost 2 years. So trying to speed date through some of these very, very difficult structural issues, many of us did not think that that would happen. I think Secretary Besson is correct. I think to loosen this a bit, we will need a leader-to-leader talk at some point, but I don't see that that is going to happen anytime soon, given that the hawks seem to be circling the U.S.-China relationship again, and we've had a lot of hits coming from the U.S. to China over the last week. So I think the Chinese government is going to be reluctant to put Xi on a call right now until we get somewhat of a quiet period here, and I don't see that happening anytime soon.
And Chris, the market seems to be keying off of the president's attitude towards China, where with the kind of terse blog post this morning, we saw a sell-off. Then, of course, when he says, I'm sure I'll speak with the president and we'll work things out. Now, work that out seems to refer to this rare earths. Jamieson Greer was on CNBC this morning and said that China was slow-rolling its compliance with that deal, which seems to be part of this tone shift that we've seen. But then the president treated it as less of a big deal, it seems.
Yeah, Kelly, I think you're touching on exactly the right thing. I think the big story from the press conference wasn't what was said, but what wasn't said. It was China. And I think there's been real difficulty with the Chinese negotiations. The Secretary of the Treasury this morning said that they're really at an impasse. I don't think we really have any new information other than the president's optimism that he may talk to Xi. I think that's news to the Chinese, probably. So I think that's what ought to be worrying the market over the next few days, and we'll see how that works itself out.